Welcome back to Stock Kong Invest and Analysis, where we look at the market and break down the opportunities.
Intuitive Surgical outlines 13 to 15% Da Vinci procedure growth for 2026 as global expansion accelerates. Earnings Call Insights. Intuitive Surgical ISRG Q4 2025 Management View. CEO David Rosa described 2025 as a strong year for Intuitive, driven by multi-specialty Da Vinci procedure growth across the globe, increasing adoption of Da Vinci 5, and higher utilization across our three platforms. He highlighted the use of Intuitive systems on more than 3.1 million patients in 2025 and noted, while meaningful progress has been made in advancing minimally invasive care, we continue to believe we are in the early stages of this journey. Rosa revealed that global system utilization increased 3% across Da Vinci platforms, with multi-port up 3%, single-port up 29%, and Ion up 9%. He stated, demand for Da Vinci 5 strengthened throughout the year, with customers responding to broader availability as we scaled manufacturing and increasing capability through subsequent software and product releases. The company placed 1,721 Da Vinci systems in 2025, including 870 Da Vinci 5 systems and 107 SP systems. In 2025, we began offering refurbished Da Vinci Z systems as an integral part of our system strategy and placed 42 ZIR systems in the year, Rosa said, indicating a strategic focus on expanding access internationally and in U.S. ambulatory surgery centers. Rosa noted FDA clearance in January 2026 for several cardiac procedures on Da Vinci 5 using non-force feedback instruments. He detailed, given the complexity of minimally invasive cardiac surgery, we are planning a measured rollout to support training, education, and adoption. CFO Jamie Samus stated, 2025 financial performance was strong. Total procedures grew 19% and total revenue grew 21%. He added, 2025 pro forma EPS increased 22%, marking the third consecutive year of pro forma EPS growth above 20%. Outlook. Daniel Connolly, VP and Head of Investor Relations, reported, for 2026, we anticipate full-year Da Vinci procedure growth within a range of 13% and 15%. He noted, this range considers the potential impact of changes to ACA premium subsidies and Medicaid funding on hospital and patient behavior in the U.S., capital pressure in parts of Europe, China tender volumes and competitive intensity in that market, recent capital challenges in Japan, and any related impact on procedures and new pharmaceutical products for obesity management. The company expects pro forma gross profit margin in 2026 to be within the range of 67% and 68% of net revenue, with an anticipated tariff impact of 1.2% of net revenue. Pro forma operating expense growth is projected between 11% and 15%, with increased R&D and expenses from distributor acquisition. Financial results. Revenue for Q4 grew 19% to $2.87 billion, with recurring revenue higher by 20% to $2.3 billion, accounting for 81% of total revenue. Pro forma operating margin was 37%, including a 95 basis point impact from tariffs and a $70 million contribution to the Intuitive Foundation. The installed base of Da Vinci systems increased by 12% to just over 11,100. Average system utilization rose 4%, and for Ion, procedures increased 44%, with the installed base up 24% to just under 1,000 systems. Q4 service revenue increased 21% to $422 million, and Da Vinci INA revenue per procedure was approximately $1,850. Pro forma net income for Q4 was $914 million, with pro forma earnings per share at $2.53. The company ended the year with $9 billion in cash and investments. Travis Steed, Bank of America Securities, asked about FDA approval for cardiac non-force feedback instruments and its significance. Rosa explained the measured rollout and training initiatives, while Samuth provided procedure-based numbers and market opportunity. Larry Beagleson, Wells Fargo, inquired about ASC expansion and system ASPs. Rosa emphasized their portfolio's fit for ASC needs, with Samuth noting, "It's a relatively small proportion of U.S. procedures done, but we do see it growing at an accretive rate." On ASPs, Samuth said, "You should expect a higher Da Vinci 5 mix in 26 versus 25, alongside offsetting dynamics from Xi'er." Robert Marcus, JP Morgan, questioned gross margin and OpEx assumptions and competition in China. Samuth detailed the offsetting dynamics and tariff effects, and noted, "The margins are relatively healthy on Xi'er." Rosa addressed pricing competition in China and confidence in their local presence. Frederick Wise, Stifel, asked about the company's growth journey and digital subscription. Connolly attributed increased procedure visibility to clinical validation, while Samuth explained the MyIntuitive Plus digital subscriptions transition to paid renewals in 2026. David Roman, Goldman Sachs, focused on SP platform growth and macro risks affecting guidance. Connolly cited ongoing international expansion and the need for further instrument clearances. On macro risks, Connolly reported no recent customer feedback indicating material impact. Patrick Wood, Morgan Stanley, discussed new form factors and cost competition. Rosa and Samuth reiterated confidence in the existing portfolio to address customer needs in varied care settings. Sentiment analysis. Analysts frequently focused on competitive dynamics, pricing, and market expansion, with a neutral to slightly positive tone, evidenced by detailed queries about new product rollouts, ASPs, and international markets. Management maintained a confident tone in prepared remarks, with Rosa repeatedly referencing the early stage of Intuitive's growth journey and the company's substantial opportunity. During Q&A, management responses were measured, sometimes deflecting on specific average selling price projections and pricing details, but overall remained constructive and solution-oriented. Compared to the previous quarter, management tone shifted slightly to address more pronounced competitive and macroeconomic pressures, but continued to project confidence in execution and strategic direction. Quarter-over-quarter comparison. Guidance for Da Vinci procedure growth moderated to 13 to 15% for 2026, from 17 to 17.5% for 2025, reflecting anticipated macroeconomic and market-specific headwinds. Continued focus on expanding the refurbished XI strategy and digital subscription model, with MyIntuitive Plus moving to paid renewals in 2026. Analysts sustained interest in average selling price trends, utilization rates, and competitive risks, particularly in China and ASCs. Management's confidence remained steady, but the language shifted to reflect more granular mitigation strategies around pricing, tariffs, and operating expense control. Key metrics such as revenue, margin, and system placements continued to rise, but at slightly moderated rates compared to the previous quarter's higher growth figures. Risks and concerns. Management cited capital pressures in Europe, competitive intensity and provincial preferences in China, and ongoing budget challenges in Japan as notable headwinds. Tariffs and the mix of newer platforms were identified as margin pressures, partially offset by cost efficiency initiatives. Analyst questions underscored uncertainty around average selling price trends, reimbursement dynamics in ASCs, and potential impacts from macroeconomic changes in U.S. healthcare funding. Intuitive Surgical closed 2025 with robust growth, expanding its installed base and introducing new products and services, including FDA-cleared cardiac procedures and broader digital offerings. Looking to 2026, the company projects slower but still strong Da Vinci procedure growth.
Hey viewers, like and subscribe to our channel. We'll keep bringing you more insightful stock analysis, wild and insightful, just like me.